Alright, what's up? So let me show you how to actually trade stocks. So when we trade stocks, when stocks go down, they go like this, right? Oh, let me make this another color so you can actually see it. Let's make it white. So when we trade stocks and stocks have busted, right? They bust, they go down, and then they don't do much, right? Just imagine this is stock price. They don't do much after they've gone down. And then what happens, and we have a moving average here. Let's say it's a 100 moving average. And then what happens is eventually stock's going to rebound, recover, and establish above this moving average. Now that's a pre-reversal. This is what you want to look for when you trade stocks. You want to look for the reversal because the stock might just go up a bunch. So it establishes over the 100 EMA, and then what you want to do is wait for another impulse up, which means buying power. But then we have unmitigated orders. We have a zone that we want price to come back to before we look to take it higher. And the moving average goes something like this. Then you wait for price to come back down. It comes back, and then in this zone, we wait for a stochastic RSI crossover. You want it to be in below the oversold 20. And then wait for the red line to cross the white line. Very important. And at market close, just before market close, you look for when price is in the zone, just before market close, you see if the stochastic has crossed the white line, the red line has crossed the white line. If it has, and the candle is bullish, or yeah, the candle is bullish, or price is about to close at a gain, whatever gain it is, has to be more than zero. Uh, Price goes like this. Say this is a bullish candle. Then you market order with the stop loss right on the low. And that's your entry. And you just let this play out. And then let's say price it could go either way, It could take you out. Let's say it takes you out. You're allowed one more entry. You get another cross, or the red is above the white, and you enter again. Perfect. And price could go, you could be taken out again, or you could go. Let's say also if if price closes below this, the low, you are allowed to take one more entry. Let's make this, all right, let's say scenario one. Price comes back here, closes below or opens below, and then you get another entry criteria filled. Let's make this another color. So let's make this. This is called a liquidation entry. It liquidates the previous the structure low, the zone, and you're allowed one more entry in this if this one fails. So where's the text tool? Where is the text tool? Yeah, let's just use this. If two entries fail in zone, you are allowed one more entry. I call this the liquidation criterion. Yeah, and if this fails, you're out. Okay, you're out. Also, I have a few other criteria. For example, if the 20-day moving average is below the 100-day moving average, you do not enter. That's momentum. Momentum has completely died. So you want the 20-day to be above the 100-day at all times. So, or in this case, that's scenario B. If scenario A, price goes up, or price goes up again. That's ugly. Yeah, let's connect these like boom. There you go, something like that. This is the same line. So then let's say price, you get your reversal, right? You get your reversal. Fantastic. Then we'll look to take it higher. And then your exit criteria is the 10-day moving average. Let's say this is the 10-day. Let's make it yellow. If the 10-day moving average, like that, price goes down. If the 10-day moving average crosses the 20-day moving average, you are allowed to exit. That's your exit criteria. So this is the 20-day. Purple is 20-day, yellow is 10-day. So if the 10-day crosses the 20-day, that's your exit criteria. And you just netted, let's say you just netted 7.5 R. So that is the basis of our system. Now, for the best confluence and those best trades, those best stocks that move, you might want to pair this up with financial data, with the fundamental data, just to find those stocks that have the potential to really go. We have a few examples. We have Nvidia, we have Abercrombie and Fitch, we have Dell, we have what else? We have Tesla, Apple, Amazon, all those. Meta, Netflix. I'm gonna take a sip of my drink. Yeah, but also if you don't want to do, if you don't know the fundamentals, it works fine to just go with technicals and let this edge play out. Let this edge play out because sometimes the fundamentals are completely disassociated from the technicals. Price can just go. There's no logical reason, but it just goes. So this is the basis of our system. This is what I do. This is what I trade. Trend following system with the reversal, and also it works with continuation. So price crosses, but you get a new impulse. You are you just repeat the trade. This is also kind of a scaling. So let's say price does not cross and you are still in this trade. You are still in this trade. The 10-day just serves the 20-day and never crosses. You are allowed to scale in. You are allowed to scale in. It also recommended that you scale in. And we used the exact same entry criteria with the stochastic cross and the exact same exit rules. The exact same exit rules. So that's how you can catch those huge trends. Let's look at Nvidia as a case study. I removed I removed those trades. But let's say, right, let's do Nvidia. It's a perfect example. Perfect example. So price comes down. We look for the reversal. Boom. Established over the 100-day EMA. 20-day has not crossed the 100-day just yet. But we want to mark out the structure. Structure, 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 structure. We're not valid yet. We want the 20-day. Now the 20-day is above. And we have an impulse up. Price is coming back. We have our zone. Textbook, textbook setup. Let's see how much has price increased. 60, yeah, that's a healthy impulse up. 60% over just over 1.5 months. That's perfect. Now we wait for the entry criteria to be filled. Now this is not valid. Now it is valid. No, it's not valid because this never went into oversold territory, so it's not valid. So let's see. We just wait, patiently wait. Structure break up. We have a new zone. It would be this right here would be the zone. Price comes back into the zone. And this is a zone. This is a valid entry right here. That's entry. And we get taken out the very next day. That's fine. Losses are part of the game. Now, will we see a liquidation entry criteria to be filled? Let's see. Yeah, this because we broke down, this is the new structure that we're going to use later on. It's no cross yet. It's at the same level. Yeah, no good. There's a cross here. Now, maybe you would take this, maybe you would not, depending on, this is deep discount. The 20-day is about to cross the 100, which would invalidate the entire setup. So you have to try this out for yourself. But if we were to take this, let's say we take this, we the 20-day would cross below, but we would be in a, I think, pretty good trade. And new break up. We got a new break up. I do not enter when the 20-day moves below. I do not enter. I often even exit the trades because momentum dies more often than not. But if you have a good grip on the fundamentals of the stock, the story, you are very valid to take this trade. Also, another reason why you could take this trade is you have to take the liquidation entry. You can make it a rule to you have to take the liquidation entry criteria regardless where price is, because the liquidation entry is when it basically builds on the premise that price looks for that deep discount, the deep order block that it needs to reach before going back up. So you could work with that. Now we have a new zone. No good, no good. Now this is a big zone. This is a big zone. Let's see if we get an entry. No, we don't. Yeah, might be quite hard to catch a new trade, or maybe not. Yeah. Hold on. So we have. Let's go back one candle. So now we have. This would be the zone. Price taps it multiple times. You know, you could call it support, whatever. And then we have a close up. Close down here, and we close it up here. So, and we have the cross. So this is another entry. Now you could disregard this, I suppose. If you don't want, if you disregard it, you know, I did not take it. But this would be a perfect valid entry. The continuation. So we continue. And this might just be where price completely goes parabolic. Yeah, look at that. So we keep going. Price keeps going up on earnings. And I'm not sure if we're gonna get another entry. Now this would be a valid entry, but the stop loss would be way too large. So it wouldn't be cool. Oh, hold on. This would be an entry. This, I was sloppy. This would actually be the entry that we take right here. Now, if this takes us out, fine. That's fine. We take a loss and we get back in. Because two entries in a zone. Two entries. And off we continue. And you see the trend just goes now. It just goes. There is not much. And that's it. It ended. And we close at 21R for this. And for this, 36. Not bad. If we were to take it. Now let's look for re-entry. Would this be a liquidation? No. This would be a valid trade, yes. And price keeps going up. New structure. Yeah, we have another possible entry. This would be the zone. Let's see if price taps it. It does not. It does not tap it. Now it does. Do we have? Oh yeah, and we have the crossover, so we would be out of this trade at, just around break even almost. And there's our stochastic cross. That's a very tight stop loss. But it is a valid, valid trade setup. So we take it. And yeah, this might just be the home run. Price comes back in the zone. We get the stochastic cross. And we exit again at around break even. So this looks like a typical consolidation situation. We have to mark out the new structure. Let's delete this. It up, broke up, broke down, broke up again. Yes. And our zone would be probably this candle. And this would be the low. This would be, yeah. And we have another valid entry. Now, consolidations after a trend run are quite profitable. They're quite nice to play with. Because it's just trend maybe just tends to continue. And there we have another valid entry. This would be the liquidation entry. It liquidated the the structure low and basically all of these other lows. And yeah, it found that deep discount for price to go higher up. And the 20-day did not move below the 100. The 10-day didn't even move, but we got that perfect liquidation in the consolidation. This will be a reaccumulation pattern, the white coffee and style, if you're familiar with that. And we look for our exit criteria now. And do we have another valid entry? Not yet. There's another valid re-entry right there. Because we have a new structure. It broke below that structure twice actually. But still it's a liquidation criteria off of this. So we have to take it as per our rules. Now this would be the structure high, and let's see if we will exit this trade. Yes, the yellow moved below the purple, so we exit this trade at 3R. And we're still in this trade. Because there's no point exiting right when that move has happened, like it moves below. You want the 10-day to establish itself over the 20-day before actually considering exiting a position. So we break above. We get, where's the zone? Yeah, let's use, this would be the zone. And or you could use this as fucking hindsight bullshit. Fuck this. We're in this trade, and I think that would be, yeah, that would be it. So we take this at 25R. Pretty cool, pretty cool. So all in all, from this run, Yeah, and this is a trade I took live. So same thing, liquidation, liquidated this low, up we go. Uh, yeah, in hindsight, I think I did a mistake because this would be the entry because of this liquidation, but I took this one. I don't know why I didn't take this one. I took this one instead. That was deeper discount. So yeah, this would go, yeah, 24 hour, and I'm in this trade about 11 hour. So that's how you can take advantage of trends using this system. Uh, Say, we got, let's see how much R we got. We got -1, -2, 3, 4, 5, about -5 R, and then we won 21, so we're already way above break even, plus 24. So about 40 R, I'd say. 40 R profit. That's not too bad. And that's just one stock. Oh, wait, we forgot this one. 50 R, right? Excluding this trade, right? Excluding this trade. So with this trade would be about 80 R. And that's over the course of 2.5 years, something like that. So let's say 50 R over the course of 2.5 years, that's 50%. If your risk is 1% per trade, if it's 2% per trade, you double your account, and that's just off of one stock. And if you use 2% per trade with a 20x leverage or 5x leverage, you can trade up to 10 stocks at a time. Yeah, and also, it's also very, very important to re-enter the trade. Re-enter that you pick a stock that looks good. It has good fundamentals if you're into that, and then you stick with it. It's a growth stock, and it's very important that you re-enter after you take a loss. Otherwise, you're gonna miss the trend, right? So let's look at some examples of re-entry, like this Bluebird. Now I took this one, closed it out at 13R. This was the re-entry, closed at 1.6R, -1, and then I got this 10R, and then I re-entered and I took a loss. I actually closed earlier to free up margin for some better trades. So I'm still in this one, uh, technically speaking at least. So we're looking for that continuation, and the second entry in this range that has not liquidated yet. So this could continue, we cannot continue. Another example is this Australian stock. Uh, I took this entry and then re-entry looking for that continuation up, and it looks pretty good with the volume and all of that. And yeah, I'm just, that's what it's all about. This also good push up, but 100% move. I start looking at it, breaks up, comes down, liquidates. I Yeah, I started looking at it over here. So this one on entry. I entered, I got 3R, it comes back. You see breaks, no entry. Here's the entry with the cross, and off we go. 31R. That's what you want to do. Stick with this stuff. This is what you want to trade. This is how you catch the trend. This is how you catch these trends. So yeah, have a good one and cheers.